It's certainly a Thursday, ladies and gentlemen, as Bitcoin has seemed to stall out briefly, while altcoins seem to be making a move. So, is this bus leaving without us? Is it time to go all in? Let's turn to the charts and the analysis to find out in today's crypto market update. On the daily time frame, Bitcoin is continuing to consolidate after its epic plunge on Monday down to those unprecedented lows. Not unprecedented, of course. It is just simply a retest of these range lows and actually a higher low. Also a test of the 200-day simple moving average. Now, the current and the previous two daily candles can be considered inside bar patterns. What they are indicative of is consolidation in the market, and they often foretell a breakout in either direction because we are seeing compressing volatility within the range of the previous parent-child that brought us down to this range. As we have talked about in our previous update, Monday's wick also pushed price down into low volume node territory of the volume profile, where we know liquidity often sits, where resting limit orders, where smart money resting orders will sit. The footprint chart and the large limit chart also confirm this by showing that very large limit orders were filled in that price range. So far, Bitcoin has been able to maintain this consolidation at the very bottom of the high volume node where most liquidity was traded. And that is where we are currently consolidating. Looking at the volume delta indicator, we can also see that buyers have been stepping in over the last 3 trading sessions, including today. And our time transformation momentum oscillator, after printing a bullish buy signal on Tuesday, is following through with a return back into the regular range from being oversold. Also note here, very importantly, that Bitcoin is attempting to return to the trading pattern that it was respecting throughout this entire downtrend, which was a falling wedge. We are attempting to break back into that by breaking above the 21 exponential moving average on the 4-hour time frame. If we are successfully able to reclaim this level, I do expect that Bitcoin's price will be moving up here closer to the 63,400 level and the retest of the 55 exponential moving average on the 4-hour time frame. A quick look at the Bitcoin power law corridor indicator lets us know very simply where we're at in the market cycle. Of course, for our Crypto Trading Academy members, I do dive deep into the on-chain analytics provided by Glassnode to provide much more context to this. Very similar to the 2017 cycle, we are consolidating in the pre-euphoria phase upon testing the center line here. There was a period of about 96 days of consolidation before we were able to successfully break into the high value area and the desired distribution zone of long-term holders into the euphoria phase of the market where prices appreciate rapidly. Even taking into account the law of diminishing returns, we should expect to see, unless Bitcoin is going to do something it's never done before historically, we should expect to see over the next year, Bitcoin break into the euphoria phase of the market cycle and appreciate into the high value zone of the market. Looking at the fundamentals of mining, we can see that Bitcoin is in a very critical situation after testing the production cost, the average production cost of Bitcoin. Now, a quick back test of this indicator will show that there are no historical examples ever in Bitcoin's history of any sustained closures below this level. Bitcoin has always reacted violently and moved, consolidated briefly, or moved aggressively away from this level of support when tested. The last time that we have had such a significant test of this level to the point where we have actually wicked below it was during the previous market cycle bottom that occurred here in November 2022. Historically, this has been a back the truck up level of support. We can also see from the hash ribbons indicator that miners are still in capitulation. So for those who do not want to average down into an asset that is moving down into, which I generally don't recommend, you should generally average into an asset as it is moving up. That is the correct way to dollar cost average. Then waiting for a hash ribbons buy signal, waiting for miners to stop capitulating is a signal that you could be watching for. Keep in mind that with runes and ordinals taking up a lot of demand for block space right now, miners are earning a lot of fees from transaction fees that they are charging because of all the demand for block space, thus allowing them to focus less on block rewards and continue to distribute that Bitcoin that they are receiving as the block reward. So I do believe that that is going to prolong potentially this period of consolidation or correction. In addition to price making a double bottom, the NVT signal is also potentially going to be making a double bottom here as well, and waiting for that crossover of the NVT and the signal line is also a strong buy signal historically for Bitcoin as well. Turning to the liquidation heat map, we actually see something that I consider a little bit negative for today's price action for the bulls today. As you can see on this most recent upthrust to the current highs of about 62,300, we've cleared out almost all of the significant short liquidations, which to me is not the most bullish thing in the world. Contrary to what you might naturally interpret, after we've cleared all of these short liquidations, that's usually when we see price begin to come back down. As it shows, and we can see with the lack of demand for shorts that are being cropped up here, that indicates that the sentiment of retail, those who are kind of latest to the market, is switching to being bullish. And we are still in a meso downtrend that has been dominated by sellers. So we did see, unfortunately, sellers step in with a lot of strength here on this retest of 62,300, which we had previously made. And we can see all of these long liquidations stacked up directly below this low that we had established over the last few days. Unless we're able to convincingly really close back above 62,300 within the next trading session, I would seem more likely that we do end up moving down here and beginning to liquidate these longs. You can see that we are getting a little bit of a weak bounce here after clearing out these latest of late long liquidation levels right here. But I would not really expect, although it could possibly happen, I would not really expect price to march too far above 62,000 if we are going to descend down lower. If we do continue to push above 62,000, then we're probably going to reclaim the trading level. And as I said, with our 4-hour analysis, begin moving higher. But for short-term traders, those who are intraday, I would be pretty cautious and be watching the market pretty closely, as this is not the most bullish sign to see very short-term. Looking at the aggregated order book as well, and of course, we're always looking at Bitfinex because that is really where the significant plays happen, in my opinion. Binance is far too noisy. There's far too many retail traders on there. Same with OKX and same with ByBit and Huobi. But Bitfinex, you got to be an OG to trade on Bitfinex. We can see that a pretty thick cluster of bids is coming in at 61,950. And we do, or excuse me, a pretty thick cluster of asks is coming in at 61,950, which again, I do believe, and we can actually see that that just ramped up a little bit. So I would believe that level should act as short-term resistance if price is going to make a more concerted descent back down to retest the $60,000, $61,000 level. We do see a bid cluster coming in at 61,570, where we could see a temporary bounce back up to 61,700, or if price is unable to reach this, this is probably the next stop down. Looking at our large limit orders, we can see on this latest upthrust that we did fill quite a few large limit orders. 1.33 million, 1.17 million, 649,000, and then this one for 785,000. We almost grabbed this $2 million order. The next significant large limit ask is about a $5 million bid coming in around 63,036. So as I said, if we can start aggressively pushing back above 62,000 today intraday, then it will look more likely that this rally will continue. But having seen these large limit asks filled, and then looking at the lack of short liquidation levels that we've seen come in, it's just a little bit bearish intraday. Finally, turning to our footprint chart where we can see the ask bid imbalances in the market. We can see, unfortunately, that each time we pushed up here to about the $63,000 level of resistance, we had aggressive buys come in at the top. If we zoom in, we can see that. You can see about 140 BTC there to the buy side right there at the very top of the wick. We can see here this aggressive buy imbalance of about 115 versus 46 at about a price level of 62,269. And all of that aggressive buy imbalancing was unable to actually push price back up and reclaim that $62,000 level. And again, on this most recent upthrust, we actually formed a lower high. And again, that aggressive bid imbalance was cleared. We did come down and clear this first bid imbalance that you can kind of see. But aggressive selling did come in here at 61,927. That also aligns with where that large limit ask is on Bitfinex. So that is the very critical level I would be watching for intraday for the short-term traders today. I think if we are able to successfully close above that level, then I would probably favor long positions intraday and overnight as we do push up and attempt to clear out these ask imbalances that really started about 62,631 and stretch all the way up to about 64,138, which $64,000 to $65,000 was my actual swing target for this bounce off of 59K, where we would then reevaluate and see where we think the market is going to go. If, however, we are unable to close above that level, I think today, unless we get a crazy movement overnight, then most likely we will go down to hunt liquidity, fill these bid imbalances at 61,365 and 61,023, and then most likely begin to target this cluster of long liquidations that is heavily clustered here from 60,550 down to 60,230. Ethereum similarly is consolidating directly below the 51 and 21 daily exponential moving average cluster and directly underneath this high volume node of high liquidity. We are printing some regular bullish divergence on the daily time frame, but for me, I think it's important. I'm not really looking for these big moves out of these assets. However, in the short term, if we are able to clear 3,500 convincingly, then we could see an upthrust here to liquidity at around 3,700. I would not be putting my expectations much higher than that in the short term. BNB similarly here is consolidating at its support level, but we're not in the low value area of the range. So this is a less attractive area for me to bid up on BNB. If we had descended all the way down here closer to the daily 200, then I would be a little bit more bullish on BNB, but we'll see what kind of momentum we can generate if and when we can break above 607 here for BNB. Solana did break the daily downtrend that had been trading into after a significant bounce off of the daily 200 simple moving average, generating a time transformation buy signal here as well. This is something I pointed out to the members of the Trading Academy. We are now pushing up here and facing resistance at the 55 exponential moving average. I would likely be booking short-term profits on Solana and aggressively moving that stop loss up because I would seem a pullback is likely in order here for the altcoins. XRP is beginning to look attractive as we are now getting down towards the lower area of the value zone with an oversold time transformation as well. The previous bounce wasn't much here on the daily time frame, but there's still likely a profitable bounce here in the cards. Remember that XRP is a stable coin, so it doesn't care what the rest of the market's doing. XRP does its own thing. TON is maintaining its uptrend. TON is maintaining its uptrend. Now, it hasn't been able to make much significant progress to break out. We have been kind of just trading in this big range that we can see basically from $6.06 to $7.67. So not a ton of forward progress that we've been able to generate. I would likely be looking to take profits or actually consider short positions as we get closer here to $8. Cardano similarly has fallen out of the previous trading range and descended down into a secondary high volume node. I would expect to see price consolidate here, and there will likely be bounces up here to retest the 21 and 55 exponential moving average. Anywhere from about 40 to 43 cents, we could see price rise in the short term. Shiba Inu seems to have found a little bit of support. No historical volume cluster that we've fallen into, but as we can see, we are developing some bidding pressure right here. I would consider a movement back up to about 1981 potentially for Shiba before the downtrend does continue. Avalanche is generating some positive momentum as well, coming off a time transformation buy signal. We do have the 21 exponential moving average right here as our current level of resistance at 2878. If we can clear that, we could potentially make a move back up here to the bottom of the previous range of support around $32. Finally, Tron, again, range bound and is approaching near the top of its range. I would keep my eyes on Tron to potentially fade this rally. And finally, Chainlink with its fourth test on this support. I would expect Chainlink's price to actually go lower. If we do see a push up and a rejection, if we're not able to reclaim $15, then most likely we are going to continue to move down. So many more coins I could cover, but this is not just about technical analysis. This is about teaching you the tools and strategies that you need to trade more effectively. So I want to remind you guys that you do not have to do anything that any influencer, crypto trader, anybody who says they know what's going on, you don't have to do anything that they say. All right. All you need to do is be true to yourself, focus on capital preservation, and create and stick to your trading strategy. You do not need to catch 10x movements to make money in this market. That might have been the mentality and the strategy back in 2016, back in 2020, but nowadays it is a picker's market. We have this phenomena of altcoin dispersion. There are thousands upon thousands of altcoins to choose from, and they are not all going to pump. I do not believe that this next leg of the market cycle will be like previous market cycles. If you are intending to hold coins for the long term, you have to spend a lot of time doing back-breaking fundamental analysis, on-chain analytics, developing that conviction and holding that conviction for a long period of time. And for most individuals, I just don't think that's the right thing to do because the vast majority of individuals will go down that route and still not end up picking the right winners. Focus on trading. This is a volatile market. Prices move quickly. This is a trader's delight. Focus on building a short to medium term strategy that aims to capture in the short term anything from 3 to 5% movements, and in the medium term 10 to 30% movements. If you can just repeat that consistently 10, 20, 30 times a year, you will be well on your way to making this, to converting this from a hobby into a lifelong profession, because this is a practice that can be repeated in any market, on any asset, anytime, anywhere. and you only need a laptop and your own discipline to achieve this. So focus less on crypto Twitter alpha and focus more on developing a sound technical strategy that can put money into your pocket. Ladies and gentlemen, trade safely. I will see you in the next one. If you would like to make trading a more serious part of your life, I invite you to apply to our Crypto Trading Academy. We are going live next week, and the waitlist is quite full, so please submit your application while you can. The link is in the description. There are also 2 more days left in our Fairdesk trading competition. Up to $50,000 in prizes is going to be handed out to traders for their volume and other participation goals. Check that second link out in the description if you want to get involved and trade with us today. Guys, be good.